The following is a presentation of TFNN. Live at TFNN, the Money Masters. And now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. This is Tom O'Brien. Steve has a little business today. We do appreciate you being with us. Market-wise out here, folks, you're going to see some big action out here today. We have lots of action. Right now, you get the Dow up 16, NASDAQ is down 11, S&Ps are off 2. You get the gold market up 19. Silver is down 7 cents. That's after being up. Bottom line, folks, you're going to see some big, bad destruction out here today. Bonds are down 9 ticks right now. King dollar. It's all about King dollar. King dollar is on the move big time. It's up 37 ticks at 77.50. The euro is down 67 right now, but you're going to see even more destruction in the euro. Why? Well, what you have this morning, the European Central Bank came out 25%, 25 basis points drop in their interest rate. That's the first part. The second part gets more interesting. This, now you got to remember something. The European Central Bank. This is Trichet is gone now. Okay, they have a new guy. They weren't expecting. Actually, in the first hour, I had said it was 24 out of 28 analysts thought that the European Central Bank would keep the rates the same. Actually, the number, it was 54 out of 58. So the large institutions were on the wrong side of the euro, folks. That's why you see this euro selling down so quick. That's why you see the dollar going up so quick. And that's going to continue all day long. It's going to continue more than all day. Because that wasn't the only thing that the European Central Bank has come out with. He just come out with that they're heading to a recession. But the biggest part is this, is that he just came out and said bottom line is that they're not there to save governments. That, folks, is a huge deal. That is an absolutely huge deal. This is this is going to be just amazing watching how this shakes out. Because it makes sense that if you're a new guy on the block, right? Well, you're going to put your hand in it. And if you're going to put your hand in it, you might as well put your hand in it at the very beginning, and the gauntlet goes down. And when the gauntlet goes down, in this case, what he's done is this. The gauntlet's going down. He's saying, enough's enough. You can't pay your bills. Well, so what? See ya. Don't want to be ya. You want to be a socialist country? Great. Be a socialist country. No problem. Just pay your own bills. This is going to be rocking and rolling, folks, and it's going to be rocking and rolling in a huge way for a huge amount of time. Let's go to our man Rick in British Columbia. Hey, Rick, what's going on, brother?
I'll tell you, you better start paying your taxes down there, or you're going to be like Greece, like I mentioned to you.
No way, man. We get up in the morning. We work every day.
Yeah, but you don't pay your tax. You don't have to pay taxes, though.
We pay a huge amount of taxes.
Oh, you do, eh?
Yeah, we just don't have any state tax. We have federal tax.
How can that work? How can your state function without tax, though?
Easy.
Oh, okay.
We get so no, seriously. Watch how this works. The property tax, okay. First off, you got to remember what government's supposed to do. Government are only supposed to basically take care of the main services. They're not supposed to be transferring wealth. Okay. So in Florida, bottom line is that we get tax for your homes, which is big money. You have taxes, excise taxes. We get plenty of taxes. We just don't have a state tax on our income.
I see. Okay.
Right.
Well, one thing that surprised me was that I had heard from somebody that I respected just locally, and then I seen it on CNBC that the Canadian debt, and now I don't know if, our real estate, like in Vancouver, is outrageous. Okay?
Yeah, no, you got a good bubble going on up there, right?
Like my brother has a half a house, okay, and
yes.
it's not a big house at all,
right?
And he lives in North Vancouver, which is a little higher class area, but
yes,
it's $500,000.
Right.
That's just a half a house. Like $1 million house is not a big house.
No, listen, you got a bubble going on up there. No, I no doubt. Right.
Yeah.
Right.
But anyway, Tom, I know over the years, a lot of times, you're pretty respectable. Gold is so hard to trade. I'm looking at the GOLD, and I'm just curious, what's your take on gold at the moment here? Do you think we're topping out, or?
Yeah.
Okay.
Yeah, I think we're going to be building a floor, and that floor is going to be out there for about a year to a year and a half.
Okay, now.
And what I mean specifically, folks, is this: that these highs that are out here, will they surpass? I don't know. I don't think so. I think they're going to go up and test them, but I suspect we'll be out here a year and a half. And the bottom of that is 15.35. The top of it's 19. And I like that. The reason I like it, folks, is this. So if I look at a longer-term aspect, right? If you go out, the way that gold has got to higher prices and built a floor for a year and a half after acceleration's up. So when I look at the aspect of, where we are, it's like, hold it, that makes sense. You can build a floor for a year and a half. It costs over $1,000 right now to get gold out of the ground. So I'm not in the camp that, no, this gold's going to crash, okay? But it can go back to $1,250? Yeah, it can. Now let's go out a year and a half or 2 years from now, though, okay? The way that the economy is going to come back is that they're going to keep pushing more paper into the marketplace. So inflation is going to light up. It's just a matter of when it's going to light up. If it lights up 3 years from now, it lights up 3 years from now. That lights up, all of a sudden, gold at, $2,200, $2,300 won't seem like a big deal. I don't think the value is there right now at all. In fact, to me, it's not even close. And the reason it's not close is this, folks, is that the correlation, it's always about what you can buy with what you have. And when I do the correlation, I've done this before if you haven't heard it, but the bottom line is, 10 years ago, you could buy 100 ounces of gold for $30,000. You sell the 100 ounces right now for $190,000. You take the $190,000, you buy a house that was $400,000 for the $190,000. What have you just done? You've taken $30,000, you get it in an asset that right now you can get for $190,000, that was worth $400,000, that no one wants. That's the trade, folks. That's the bigger trade. And you'll see the demand as that kicks in. What tends to happen in all markets is that they're all cycles, they're all markets, and they're all perception. So that's my perception at this particular point. What I like about that whole deal is that it's almost the heads you win, tails you win. And the reason I'm saying that is that if you're in the camp that it's going to be inflation that goes, well, just look inside a house. Wood, copper, steel, concrete, oil-based products, okay? All of that is in there, So when I look at that aspect, that's how I look at it on a longer-term basis. 3 years from now, if gold builds this nice base, what I like what happened with gold is that when it came down to the 1560, when I tried to get into that, the volume contracted again. That's telling me that we are going to be in the consolidation. If it stays in the consolidation for a good year, you get a $400 consolidation. That means that there's huge amounts of money made in the year and a half. And then we'll see whether they can build us some cause. And if they like the inflation deal to get rid of all the debt, well, then gold's going to go up to the next floor. And it won't be a lot of money, 3 years from now. It just won't, because you get used to perception. We all get used to things. That's how it seems to shake out. Market-wise out here, we get the Dow up 46, Nasdaq's flat. S&Ps are up 2, gold's up 26. Silver is taking it on the chin. When I say taking it on the chin, what I mean is that silver was up, and they just took them, and they took them pretty quickly. Where she is. Okay, so come on, baby. Give me 1 second here. We'll bring this up. When we talk about silver, folks, we have the Great Panther Holiday Silver Giveaway happening. And the way that you, so silver hit a high today of 34.90. Right now you're at 34.20. and that down drop, someone just sold into this market and sold in big. You know, you're talking big contracts here. 1,200 contracts just hit that market on the way down. What we're doing with the silver giveaway, folks, is that you can come over to our website at TFNN. It's free. Just sign up. Every day we're giving 1 ounce of Great Panther silver away, and what we want you to do is to give it, okay, to gift the silver. You tell us who you want to send it to. We'll send it. We'll put a nice note in it from you. And we're talking whether this is, brothers, sisters, children, it doesn't matter. Friends. Bottom line is that it's going to be the gift that keeps giving. And so we're going to have some fun with that. Market-wise out here, let's see what Europe has done. Volatility is here and here in spades. Let's see. So, yep, Europe's giving it up. Okay, so if we go over to the DAX was up 3.5%. Now you're up 1.5%. You're gonna see this sell-off continue, folks. It's just amazing, politics-wise, what they can pull off. Jeffries evidently was that had plunged down 5%. And let me pull that baby up. It's got its gains back. I mean, it got flat again, but let me see if we pull that baby up, because there's going to be problems inside many of these broker dealers that folks think they are trading, whether they're trading or not. That's a whole different ballgame. But if they're basically think they're trading, then it's going to be a problem for them. Some of the high volume stocks we have out here this morning. Actually, you know what I want to. DN. This little baby's getting toasted and roasted again. This is Dydrian. This is the drug company, down 33%, 356, trading out at 690. This is problematic. This is probably another ABC down. Baby, pretty amazing. You pull this back. This equity here was definitely throwing the dice, no doubt about it. Equity goes from a price point of, holy cow, $57. That's pretty intense. $57 down to $6. See ya, don't want to be ya. No two ways about that. REM, Research in Motion, that's still having big problems out here. She's down 62 cents. She definitely has problems in paradise. Let's go over to Apple. We take a look at Apple. Apple right now is flat at the 396 area. Inside the NDX 100, what we have inside the NDX 100, putting juice into it is Qualcomm, DirecTV, Fastenal. Taking it out of it is Whole Foods, Research in Motion, Urban Outfitters, and Sears Holden. Let's go to Whole Foods. Whole Foods was interesting. The numbers were there in Whole Foods. They just come out with their numbers, but what wasn't there was same-store sales, and that's a problem. Whole Foods are down 230 right now, trading out at 68.26. Numbers on Whole Foods, numbers weren't bad. I mean, the top line numbers were there, but sales were up 6 to 8%, but the same-store sales were down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Directions Alternative Strategy Funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds. I'm with X. To learn more about Directions Alternative Strategy Funds, please visit TFNN.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do without you. TigerMetalExchange.com, the only click you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Now is the time for Tiger Dollars. Purchase $250 or more before November 4th and receive a 30% match. Go to the front page of TFNN.com and get your Tiger Dollars today.
Welcome back, folks. We have the Dow up 55, NASDAQ up 3, S&Ps are up 3. And let's go to, where are we? Let's go to Sam in Denver, Colorado. Hey, Sam, what's going on? You there,
Hello?
Sam?
Hello.
Yes, sir.
Hi there, Tom. Thanks for taking my call.
Sure. Thanks for calling, man.
Thank you. Sometime back you had mentioned there was going to be volatility in the market, and I just wondering what specifically you've seen that was showing that there was going to be volatility in the market, and then what you'll see in the future that will bring us out of this volatility.
What happens is this. Now, the thing that's wild, folks, is this, is that, unfortunately, volatility in the market means you're going downtown. And when you go downtown, it's never a one-way route, okay? Markets that go down hard counter-trend very hard. They come back up hard, okay? So as soon as you have the first let go on the way down, meaning the expansion with volume, wide price spread, Sam, okay? That's the start of it. And as soon as it starts, what happens, it shakes up the established players because, see, most of the established players in the marketplace only know one thing. And the way that business is set up is to accumulate money, say, give me your money, the markets are going to go up over a longer period of time. Well, that is not the fact, okay? You know, but that's how the business is set up. So as soon as you have the first play down, all of a sudden it shakes that whole area up. The way that volatility stops is that the market gets to where it wants to get to. Once it gets to where it wants to get to, it flushes the whole deal down, and then you start off, and then you get a clean market again. And, you know, we don't have a clean market. And without a clean market, that volatility will continue.
Okay, so what period of time are you looking at? A year and a half, 2 years down the road? Or?
Yes. Yes.
Oh, okay.
Yeah.
All right. Well, thanks for the information there.
Okay,
Appreciate
man.
it.
Have
a great day.
Have
Bye.
a great one. Have a safe one. And I know, folks, that sounds like a long time, but it's not. You know, what happens is this. These things are never going to be, well, let me tell you something. You don't want them to be quick events, okay? If it was a quick event, if people, you know, understood where this market wants to go and went very quickly, it would be disgusting for everyone. What the markets absolutely do is give you a chance to get out. Most people don't take the chance to get out. But they give you a chance. And they give you, it seems that markets give you a chance more than twice. It seems like you get 3 times to get out of the market. If I've learned anything, you know, in the course of the last 30 years, you normally have 3 chances. The question always is, do you want to take it or not? You know, the way I always start off any business is how much I can lose, not how much I can make. You know, because you're always going to make money. You make millions plenty of times. It depends on how many millions you lose making them. So if you start out with that aspect, folks, you're going to be a lot better off. Let's go to Jeff in Dunedin. Hey, Jeff, what's going on?
Hey, Tom, thanks for taking my call.
Sure.
I had a question for you about the DXD, David, X-Ray David, and whether, I'm just new to this, and whether it's actually setting up a tiger butterfly, if we go back to July 21st as the X point, and then go to August 9th as the A, and September 1st as the B, and then October 4th as the C, and then taking October 27th as the D point. Have I done that correctly, or do you think that I'm just not looking at it right?
Okay, I'm sorry. Let me have the A point again, please.
Oh, sure, yeah. The A point was on August 9th.
So you're going up there.
Yeah. And then
okay, so you get A to B, and then A to B.
Yeah. So the X was on July 21, and then 8-9 was the A.
Yeah.
September 1st was the B, and then October 4th was the C.
Yeah. No, that's...
And then I'm looking at the volume, too, the way the volume trends with it. You know?
That's right. No, you would have liked to see... What he's looking at, folks, is that what I would have liked to see, let's see. So, extension... You would have liked to see a little bit more. See, it would have come down to... It would have had to come a lot lower, actually. It would have had to get down to that... what's that? Because you want a 1.27 on that. You see what I'm saying?
Yeah, I don't have the art of the chart yet, so I can't calculate it.
Yeah, that would have got it down to
it
would have got it down to 1463.
Oh, okay.
Yeah.
So then this is not. So then we shouldn't see the big pop coming off of the 27th to really hold. Then you're saying, or what do you think?
Oh no, it just means it wasn't. No, it doesn't. No, it just means it's not a tiger butterfly. That's all. No.
Oh, okay.
Yeah,
okay.
no. This baby, the DXD is going up. The DXD wants to get into $20, man.
Yeah, I know. I got in there a little bit at between the 16 and 17 range, and I've just been waiting, to see. People are telling me I'm wrong, but I'm looking at it going, no, this thing's going to go up. So.
Beautiful thing. Have a great one. Have a safe one. We'll come right back, folks.
Sure.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to tfnn.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow up 75, NASDAQ up 6, S&Ps are up 5. We get gold up 36, silver's up 52, bonds are down 28. King dollar is up 19. You got the euro flat, and the volatility is going to continue, folks, and it's one beautiful thing. This is absolutely the trader's paradise. There's no two ways about it. Tick for tick, watching the dollar, and all the dollar is doing right now, folks, is doing a small B to C of an ABC structure on the way up. So it's going to get wild watching this whole thing shake out. If we go take a look at it right now, we'll bring this baby up, a DX. And what you're going to see here is that we've done 26,000 contracts. That 26,000 contracts, by the way, is going against 35,000 contracts. Intraday, what we have is this. Now, so check this out. The first acceleration in that came into the dollar, folks, this morning, you had 3,300 contracts come in on the buy. Now, what we're doing right now is that you're coming back on the 10-minute, and you're coming back with 900. That's what you'd love to see. It can get back a little bit lower, actually. The number is 77.21. Right now, we're at 77.22. That's at the beginning of that large spike. And what you'll see there is that you'll see more than likely the same type of buyers that came in there. They'll get it going. And what we did have here on 2 or 4 day move is that the move top side was almost 100% move of the move. And that's the way markets like to go. You know, you don't do more than 100% move. You move up to the top, You back off. As long as you back off with lighter volume, what you're doing is you're building cars for the next leg up. Absolutely amazing. And listen, folks, what we're going to be doing, okay, so this is pretty cool. So let me explain what we're doing here. You know, with number one, it's go long America, it's go long the U.S. dollar, right? And if I know one thing, is that if cash flows stay in communities, that's how we all get out of this. We did the promotion with Barnes & Noble, and I want to thank all. It was highly successful. Now, what we're going to do is we're going to have some fun for the next 2 months. And we're going to continue the promotion with Barnes & Noble. So if you buy my new book, The Art of Time in the Trade, Your Ultimate Trading Mastery System at Barnes & Noble's, you'll get 2 workshops that are worth $300. So if you bought the book, I appreciate it. What we're going to do is this, is that the cities that we have a whole list of cities that we know we've sold a lot of books at Barnes & Noble's. So Steve and I are we're going to have a contest, city by city. And this is going to be up on our site. And the cities that sell the most amount of books at December 31st, Steve and I are going to come to your city and we're going to do a workshop, free, period. Now, we have them grouped because what does happen is that we have a bigger presence, of course, in certain cities. And these are the groupings, how they're set up. It's going to be Denver, Tampa, St. Pete area, and Boston. That's one grouping, okay? Then there's another grouping that's going to be San Jose, Oakland, Orlando, and then Portland, Oregon. That's another grouping. And then the third grouping is going to be Dallas, New York, Spokane, Miami, Chicago, and Sacramento. So the way that it works is that you go to Barnes & Noble's, you buy The Art of Time in the Trade. You know, if you already own it, give it away. Give it away for the holidays. What would end up happening, whoever has moved the most amount of books at the end of December 31st, in those 3 groupings, we're going to do 3 of them. And we'll do 3 of them, and it's absolutely no cost. So you can check it out at TFNN. We're going to have some fun with it. And, of course, as you're over there checking it out, don't forget we have the Great Panther Silver giveaway. If you want to give an ounce of silver to someone, folks, just sign up for it. There's nothing there. Just sign up. And you can win as many times. There's not, you know, we're gonna pick the names every day. Market-wise out here, we get the Dow up 65, NASDAQ up 5, S&Ps are up 4, gold up 34, bonds are down 28. We're going to be right back.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the markets and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day. Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow up 107, Nasdaq up 15, S&P's up 8, gold up 37, and you gotta love it. They just hit the dollar, so the dollar just went down 5 ticks here. It's 77 to 12. Still no juice behind it, meaning on the way down. You can expect this volatility to continue. Euro is up 16 ticks right now at the 137 level. We go take a look at overseas. What you have overseas is this. The DAX is only up 1.7. It was up 3%. FTSE is up 0.5% right now. If we go over and we take a look at the FTSE, this is what you have inside the FTSE. She had a high out there of 55.64. Right now we are at the 55.18 mark. The DAX in Germany, we are at the 55.18. It was as high as the 55.64. Let's go take a look at the diamonds, the DIA. DIA right now, folks, this is the exchange traded fund for the Dow. That's up $1.11. 3.7 million shares, and if you want to see the correlation here, you were down on 15 million. Yesterday what we did is we did 7.6 million. She's up on 3.5 right now. And what is she going into? And this is what's so cool. She's going right into the gap, folks. And that gap, from the gap away on the way down, is going to be a heavy one to basically take over. Now, what you also have is that on the way down with the DIA today, at the low out here of the $118.16, $118.16, they had 550,000 shares. What that's saying is that that little baby wants to come back down into those levels. Let's go to the gold market. We take a look at gold. Okay. Gold is up $36 right now. You're doing 100,000 contracts. What gold's trying to do, folks, and it would just be a beautiful thing if it can get it done, is that it looks to me like it wants to do a Gartley. Now, that Gartley will, you know, we're over the swing point. The swing point that we're over had 156,000 contracts. You're at 101. So it can absolutely do that juice there. Now, it's coming into 350,000. The number, however, gets you into the 1800s. And right now, you're only at 1766. So we'll see whether that can hold. If it can hold, it'll be a nice setup all around. We go back over to the euro. We take a look at the euro. Okay, so euro out here is trading at 137.66. It's been as low as 136.57. And this hasn't overtaken the highs yet. Yesterday it came up to this 138 area. It was up there this morning, 138.35. Came back downtown, coming right back up to the very, very highs of that. So the volatility, yeah, it's out there. It's out there in spades. We take a look at some of the high volume stocks out here. BAC right now is flat. You get Sirius XM down a point. Qualcomm is up $3. We get Ford Motor Company up 5 cents. Jefferies Group is down $1. Let me go see Jefferies Group, because this little baby was getting hammered. JEF. Okay. Okay, so Jefferies Group, check this out, folks. Jefferies Group, do not touch this equity. This is an ABC down, too. This is what you have with Jefferies Group. This is pretty intense, actually. Okay, so Jefferies Group, broke the B point of an ABC down. That B point out there, folks, is $11. We got to $9.79 today. Now, it's come all the way back. But when you're down there and you have volume on the way down there, which we have, that equity is not done on the way downtown yet. That's how that little baby's set up. So what you'll see is that you'll see that baby come back down into those levels again. If we bring Jeffrey's group back, let's bring it back to 07. We put this on a weekly basis. Yeah, this little baby is going all the way back to its lows. Now, what's pretty, yeah, this is going all the way back to its lows. That's the bottom line. So that little baby has a lot of work to do. We go take a look at the SPY, the SPY. What we have in the SPY right now, there she is. Okay, so the SPY, SPY is up by 100 million shares. That's after being down with 416 million shares. What this is all about, folks, is high volatility. You can expect that high volatility is going to stay in the market, and we're going to be up, down, and all over the place. And, of course, what does it have to do with? It has to do with the dollar, has to do with the yen, has to do more so with the good old euro. And the euro right now, we are flat. The euro, it's 137.87. The euro, I suspect, at the very highs up here, you're going to see the failure again, and you're going to be right back down the other side. And what this has to do with, it's news, and news is going to continue on every 20, 30 minutes. It's going to be out there, folks. Bottom line, when you cut to the chase, what is it? The chase is that the European Central Bank went down 25 basis points, 0.5%. What does that do? That puts weakness in the euro. Second part, they're not going to be buying bonds. Why? Because they're broke. Third part, which is the largest part, is what? Greece is going to split from the European Union. Fourth part is that they're going to tell them to stuff it with the rest of their debt. They're going to say, you take the debt, we're going to start from scratch again, we're going to take the euros that we have in the country, we're going to turn around, make the drachma, I believe that drachma was the currency before, and to start again. And what does that do? Puts huge pressure on the European Union, number one, but what it also does is push huge amounts of debt, because, you know, the debt structure right now at the banks, folks, I don't believe they've even taken a 50% haircut yet. The beginning of it was a 20% haircut. Just think if it's going to be a 100% haircut. And it is going to be a 100% haircut, folks. The reason being is that the debt structure itself, just so you understand this, if the Greeks didn't have any debt, they still couldn't pay their operating expenses day to day. Okay? So it makes no sense. See ya, don't want to be ya. We take a look at the, let's go take a look at Rango Resources, GOLD. Now, this has been the strongest gold equity out there, bar none. Rango come out with numbers yesterday, big numbers. Rango right now is over its highs. And that's the only gas stock, that's the only gold stock, period, that is over its highs, folks. Pretty amazing, no doubt about it. We look at Gold Corp. Gold Corp out here, trading at 51.33. Not the end of the world, but certainly not at its highs. We have the Dow up 120, NASDAQ up 23, S&P's up 10. You stay right there, folks. Of course, I'm going to be coming right back, but then we're going up to Basil Chapman and Newton, and we're going to be going out to Larry Pesavento in Tucson, and we're going to be coming out to California at 3 o'clock with Ken Shreve, and then back to Tampa for myself. We're going to be right back, folks.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before December 31st from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Thanks for being with us. And, folks, if you haven't taken advantage of the Tiger Dollars yet, the way Tiger Dollars work is that you want to make 30% on your money. We will match what you buy at TFNN. Tiger Dollars, they have no expiration date. If you have any services at TFNN right now, it absolutely makes sense to get them because the fact of the matter is that you spend $250, you get $325. You spend $1,000, you get $1,300. We've extended the program until tomorrow, so this is it. We extended it, of course, because we had 3 million Tigers without electricity. We're down to 1 million. We're hoping by tomorrow that everyone's going to have electricity back in the Northeast. So you can check that out at TFNN. Let's go to Paul in Claremont. Hey, Paul, what's going on?
Hey, good morning.
How you doing?
All right, yourself?
Good, man.
How's sand still looking good to the low 60s?
The what?
The low 60s.
What stock, please?
LVS.
LVS. Okay, so let's take a look at it. You got Las Vegas sands. The low is 36. The high is 55. So you're looking for this to go to the low 60s? Is that what you're saying?
Yeah, somewhere in the low 60s. That's the way it's still holding that on the charts. You know, bottom 3 times around the 36 and held good.
Oh, I see. So you're looking, okay. So this is what he's looking at, folks, okay? You know, this came off the bottom, has that high volume out there. Oh, yeah, look at that. Interesting. Yeah, look at that. That's quite a... Man, that's quite a consolidation. Oh, I see. I remember you calling before. Yeah, no, it is, because it hasn't been tested yet. Yeah, it is. Let me, you know,
even though it was high volume.
I'm sorry?
Excuse me. Even though it was high volume on that high day, you know, the 55-day back a year ago, even though it was basically all selling out, that's still good to be tested again?
Well, you don't know that was selling.
No, well, I mean, it didn't hold the 55.45.
To me, a higher high is buying. A higher high with volume is buying.
Oh.
I understand what you're saying. You know, what he's saying specifically, folks, is that the week of November 10th, November 6th, 2010, stock goes from 45 to 55, has volume, went up the next week and then gave it up. You know, that just wants to be tested. I mean, you know, don't get married to the stock. But what you need right now is this. You got it last week. Okay, you're pushing into the highs with volume. That's what you want to see happen. Where I think you're going to have a tougher time to have it break topside this time is that market-wise, you know, they'll take down the good babies with the bad babies.
Oh, that's the problem. Every time we get good news, it's on a bad day. There hasn't been any bad news for a long time. It's all been good, and the market's, you know, not that great. So
yeah, exactly.
Can't get out of its own way. You know, even today, there's only like about a half an hour's worth of volume so far in an hour and a half. Usually it does this in a half an hour. It does 4 million.
Right. And so
it looks like it's all computer trading to me most of the time.
Well, it really doesn't matter. All that matters is money moving in and out.
Mm-hmm.
You know.
But it still looks good, right? Yeah.
And well, it's still in a consolidation. You know, but you know what the bottom of that consolidation is. I mean, until you can get a market that wants to go topside, I can't picture it going up another, you know, $10-15 right now. But
yeah, no, I know that.
Yeah.
All righty.
Okay, man. Have a great one. Have a safe one.
Bye-bye.
The problem, folks, with accelerations big on the way up is the market right now. You know, the way that stock is set up, Las Vegas Sands, it's a beautiful setup. There's no two ways about it. But what you'll have is that pressure comes on the market when money managers need money, flat out. And you can see this equity just went from 36 to 47. So what does that mean? Well, that means that you get plenty of money managers that are up good money. That's big, big money. What do they end up doing? They'll end up basically, you know, selling some losers, selling some winners in order to get it straight. You stay right there, folks. We are going up to Newton, Mass. with our man Basil Chapman. That's next hour. Then we're going to Larry Pesavento. We're going to Ken Shreve at 3 this afternoon and back here. Thanks for being here, folks. Have a great one. Have a safe one.